Welcome to Cash Content and Chaos, hosted by Katherine Studley. This is the podcast where we talk tax news, current events, the spicy industry, and interview people who actually have something interesting to say. New look, same chaos. Let's get into it. Hello, everyone, and welcome back to Cash Content and Chaos. I am your host, Katherine Studley. We have another solo episode for you today as the April 15th deadline is approaching. And there's been a lot of movement recently in spicy industry news. So I just want to quickly hit on all these points and talk to you also about extensions. As you have likely heard, Leo Radvinsky, the owner of OnlyFans, unfortunately did pass away this week. He was 43 and had a long battle with cancer. He changed porn forever with this subscription model. And you likely also know that OnlyFans has been in talks to sell majority stake to a private equity firm before he passed. So now his shares are sitting in a family trust and the deal is uncertain. There's been a lot of rumors flying around, a lot of unverified claims. I saw somewhere that P. Diddy bought it. I can't even. But basically nothing's been confirmed by the company, so I would not freak out. We're not making any financial decisions based on rumors. We're educating ourselves. We're paying attention. We're reading the news. What I think, in my opinion, Katherine Studley, tax accountant, not spicy creator, is that any new ownership, especially if it's going to be a corporate investment firm, is going to look at adult content and ask whether it's a business asset or a liability. We remember 2021 where the platform announced out of nowhere that it was going to ban explicit content, and then they went back on it literally 6 days later. So I don't think that's going to happen because OnlyFans is way more established than it was. Adult content is a little bit more mainstream. But I do think there could be some disruptions to maybe the payouts or the terms of service. So my opinion, again, some small things I think you could do to help your future self would be to maybe back up all of your content. If they decide they want to change TOS and start pulling people, at least you will have all of your content. You know, people always say you should try to get a subscriber contact information. I don't know how you'd get that off the platform. If you could build an email list, that would be ideal. You also want to track your payouts on your own and don't rely on the platform, because if things get a little funky, you need to own your content, know how much you're making. And you could also try to diversify on platforms, but we know OnlyFans is OnlyFans, and that's what it is. Side note, if you're also making all of your money on TikTok, I would also suggest you diversify. We are seeing huge fluctuations in people who are monetizing TikTok. If it's the creator program, if it's TikTok Shop, if it's TikTok Live, ownership there changed. We just saw this happen. We just saw disruptions in the algorithm and payments when Oracle purchased a platform they purchased it in January. Just something to keep in mind and pay attention to. You built this income. This is your business. You are an empowered, formed, data-driven small business owner. Does not matter what industry you're in. So we're just calmly learning about what's going on. Okay, now we're going to layer in some situations going on with the states right now. Utah just signed a 2% tax into law this month on adult content platforms. Alabama already has a 10% excise tax on adult content platforms. That's been set since September of 2025. And Slovenia is pushing a 10% proposal on the subscription fees. And that's in addition to the 6% sales tax that already exists there. So this is going to be for your fans would have to pay. And then Florida has a long shot candidate running for governor who is proposing a 50% income tax on creators. Is that going to fly? I don't know. Time will tell. I think it would just lead to everyone leaving Florida because right now it's super advantageous to be a small business owner in Florida because there's no state tax. But if they're going to tax everyone at 50%, just probably move to Texas, right? We're seeing a trend in states having a stance against adult content in one way or another. When I first started this business, no one really knew about how OnlyFans worked. No one knew what it was. If that's CPAs, the government, whatever. Now it's established, it exists, and people feel some type of way about it and they're trying to make things more difficult. And then we know also on the no tax on tips deduction for the federal tax bill under the One Big Beautiful Bill, which is for people who were traditionally tipped before December 31st of 2024, which OnlyFans creators would qualify for. Other digital content creators do. OnlyFans creators did qualify until a conservative Christian coalition got together, wrote a letter to Scott Bessent at the Treasury and basically said, like, we don't agree that OnlyFans creators should be getting this tax benefit. And now they are excluded according to an IRS memo. So this is happening at the federal level. This is happening at the state level. This is happening for consumers, for creators, the platform itself. We already know there is drama with payment processors and banking discrimination. Things are about to get complicated, more complicated for OnlyFans creators as it relates to tax. What does this mean? Track everything. Be compliant. Don't leave yourself open. Take control of your business. Don't leave yourself vulnerable and in a position to lose everything that you have worked so hard for. And we'll be keeping an eye on this too. I'll be making more posts and blog posts on this. This is not the time to be winging your taxes or handling your finances alone, which brings me to what I want to help you with today. Tax extensions. What is a tax extension? Huge misconception I hear every single tax season is that a tax extension is not an extension to pay your taxes. It is only an extension to file your return. Let's say it again. Filing an extension is only an extension to file the paperwork, but not to pay your tax bill. So cruel. Evil. Super cruel. That's the rule. Okay. So an extension is going to move your filing deadline from April 15th to October 15th. 6 full additional months to get your paperwork together, submit your return accurately. We can file this for you, or you can file it for yourself on the IRS website. You don't need to give a reason why. You can just file the form and then you get the additional time. But you still need to make a payment to the IRS and your state by April 15th. Otherwise, there's going to be that late payment penalty, which is 0.5% per month on whatever is unpaid. And it adds up quick. People send us their notices that they get when they just file an extension, didn't make a payment. They're all upset about it. This is what it is, you guys. So if you don't know exactly what you owe this year, the IRS has a safe harbor rule that protects you from underpayment penalties. So if you pay 110% of what you owed last year, that's the safest thing you can do. That's assuming your adjusted gross income is over $150,000. I'm not going to get technical with you guys, okay? This is a lot of gross stuff. I'm going to break it down super easy. Let's say last year you owed $1,000 when you filed your taxes. That means this year when you file a tax extension, you'll pay in $1,100, 110% of that. This way, even if you end up owing $2,000, you won't have any penalties and interest on it or fees because you followed this safe harbor rule. It's like your safety net, 110% of last year's tax. Or you can send us your bookkeeping, your income and expenses organized by category, and we can calculate an accurate number for you. It's a $200 fee. Safest thing to do, 110% of last year's tax. If you don't have the money, at least file the extension. Help yourself. Don't let this turn into a vicious cycle. You'll at least have the extension on the paperwork, and you can set up a payment plan when you do file. Maybe you only have $500. Pay it in. Always pay your state first. Always pay your state first. They are literally way, way, way pettier. So you can file an extension yourself. Go to irs.gov. You need your name, address, social security number, an estimate of your 2025 liability. Whatever you say here, they're going to take out of your bank account. I just had someone call me and she said she just guessed and said she was going to owe $7,000. They pulled the whole thing. Okay. So it's most important that you're just filing the extension. You can say your liability is 0 and you can make the payment after. So that's going to be irs.gov/free file, and you will get a confirmation number. So make sure that you save that for your records, for your files. It should come to your email. And that way you can show that in case you were issued a notice for not filing filing the extension, you at least have that. We can do it for you. If you don't want to deal with any of this yourself, Prisma Tax Group is filing extensions for clients right now. You can pay a $200 RSVP deposit, which secures your spot as a client. It is non-refundable. And as a courtesy, we will file your extension before the April 15th deadline. And then that $200 is directly applied towards your full tax preparation fee when we go to file your tax return. So you're not paying extra, you're securing your spot as a client, and we're doing you a little favor in good faith. We also have a client application. If you're a new client, you'll need to complete that first. If we're a good fit, we're going to send back the RSVP form to you. After April 10th, we are not taking on new clients. We're not filing new extensions. We're just going to be dealing with everything in-house. Traditionally, accounting firms work super intense, crazy hours, and I'm not doing it. I'm not subjecting our staff to it. Please just understand our boundaries and respect them. We're happy to help you, but within the time frame. We still have plenty of time. Oh, we're going to link all of these things under this podcast so that you know where to click and what to do. Couple other things. Extensions do not trigger audits. That is a myth. Filing an extension is extremely common, especially for people who are self-employed. The IRS does not care if you need more time. If you are due a refund, especially from like a couple years back, so if you haven't filed your returns in 3 years and you're owed a refund, the IRS is about to keep it if you don't file your taxes before April 15th. Okay. So if that's you, then we need to expedite this whole conversation. But yeah, guys, that's my story. So we know what's going on in the spicy news. We're going to be waiting for OnlyFans to change hands. Keep an eye on the federal and the state tax laws. And if you need a little bit more time, we're going to file an extension. It's literally no big deal. Thank you so much for listening, and we'll see you next time. And that's a wrap on another episode of Cash Content and Chaos. I am Katherine Studley. If you got something out of today, share it, follow the show, leave a review. If you need help with your taxes or bookkeeping, you can find me as well. Everything is linked in the show notes. I will see you next time. Stay sexy.